If you are a follower of my webinars, and the links are in the bio, you will see that we often look at cryptocurrencies. Just because for trading purposes it can often be easier because the big banks aren't trading them in the same kind of volumes and having fights over which direction they should go in. And so the trends can sometimes be smoother. This is one classic example. This is Bitcoin against the US dollar, and it's going through the roof at the moment. It seems to be coming back again. When I say going through the roof, well, I think that is going through the roof, isn't it? The green line is where we got an indication of some momentum coming through. The red dotted line is where we add to a winning position. It is based on a mirror reflection of where the stop loss is. The stop loss is based on volatility. The more volatile the market is, further away the stop loss. So we use volatility-based stop losses, and we use volatility-based position sizing. So if the stop loss is further away, the position size is reduced accordingly, so as not to suffer a bigger loss in more volatile markets. Or have an increased probability of a loss in more volatile markets. Anyway, that's where the stop loss is. That's where we add to the winner. And as I say, Bitcoin has been doing rather well. Look at the links in the bio if you want to learn more about trading or investing for that matter, and some of the free tools. It's part of my campaign for 1 million to teach 1 million people how to be better investors.